streets. What has bond market got to do with the AMC with so much money? But the key question is, can the AMC recapitalize the entire rescued banks? It's called, in bracket, the almighty AMC. Past the hour, we'll get to forecast the MPC's meeting for this week. Or very quickly, let's remind you of what we expect this week. The Central Bank of Nigeria's first monetary policy meeting for 2011 will be underway today, and the decisions from Lamido Sanusi and the rest of the team will be out tomorrow, Tuesday. Inflation will be a very key concern for any decision by the central bank, with so much political activities and political spending for the general elections in April. The central bank needs to keep that at the back. Today, tomorrow, the foreign exchange policy will remain tight on the defense of the naira. But the key question we've been asking since last year is this: will the central bank or the bank guarantee interlink markets? Sonny Ayere from Dawn, L'Oreal Merrifield, one of the operating houses on Broad Street. Sonny, thank you very much for coming through this morning. Sonny Ayere there for you. Let's get this AMC business. You were just smiling when I said the almighty AMC.
Absolutely. Almighty indeed.
The almighty AMC, absolutely, as it were, with some measure of question mark. Track the what the AMC has done so far for us, and is it wrong to say, well, here comes the AMC is the first in Nigerian history we've never had what you can call a laundry bank, as it were. Now we've got one. So will AMC heal all our sickness?
I think the idea of the asset management company came, I think, on the back of when we had looked at the market and how bad it was back in 2008. And I think at the time it was from the perspective of a resolution trust company. In other words, a company that basically comes here to resolve a lot of the bad loans and the issues that we had at the time with margin loans. I think the fact that we've actually gotten to this point is absolutely, I think it's laudable, as use that word in this country. I think the fact that we've gotten to a point where they've closed the first 1 trillion naira. And done essentially the asset swap, which is what it really is. And that's one thing, because I recall you mentioned something to do with liquidity issues and what, the liquidity impact with respect to the inflationary decision. The good thing about the structure as is today is that it's actually not a cash, it's not a cash bond per se. It's actually what they're doing is they're taking non-performing loans off the bank, all right, and then giving them essentially a government bond or a government guaranteed bond. essentially. So it's really an asset swap. And remember, this bond, I mean, for the first one, it's supposed to be a zero coupon bond, which means that there is no interest payment on a frequency basis. The interest essentially discounted up front and would then be paid at the back end. In other words, at maturity in 3 years' time. So in such cases, you don't actually, and if memory serves me right, my understanding is I think is about maybe 25% of the value is actually what is tradable. And actually, when I say tradable, in other words, discountable at the CBN for cash reasons. So in
for any bank that wish to do that, you can't do more than 25% of what you hold.
My understanding, yes.
For example, Oceanic Bank can do more than 25% of that 200 billion.
Something like that, yeah. In terms of cashing it, in other words, discounting it at the CBN discount window to get some cash. So whilst, theoretically speaking, you've removed a non-performing asset and you've put in a performing asset, which should have some measure, right, of simply put it, positive impact on the balance sheet of the banks. It does not necessarily mean that it cures the whole bank sickness. Now let me explain what I mean by that. A bank essentially is a leveraged investment vehicle. And what I mean by that is you've got capital, you've got assets, you've got liabilities, right? So banks would normally operate sometimes 5, 10 times leverage, sometimes 15, sometimes 20 times leverage on capital. Now, if you've got assets, you've got to fund those assets, right? Exactly. So if you've got great assets, normally the idea would be that, your asset less your liabilities will give you your net capital base, right? Plus your shareholders funds. Now in a situation where, yes, you've taken off non-performing loans, you've swapped them with some performing loans, but what of the funding? If your liabilities still exceed that, you would still have a negative.
So you still have a weak asset base.
In other words, you've changed the assets. In other words, you've moved it from non-performing to performing. But again, you still have liabilities against those assets. So that issue also needs to be resolved, right? So to my mind, what I see essentially is that there's still a way to go to get these banks to sort of like the zero level where I would say strategic investors or recapitalizations and so on and so forth.
So the AMC Chikobi doesn't necessarily give anybody cash?
Not at this point in time, no. What it's doing is essentially swapping non-performing loans for performing assets, where those performing assets are essentially government guaranteed bonds. Now, I use the term government guaranteed bonds in the sense that they essentially have the same risk as a federal government bond, but they may not necessarily, I use that term, may not necessarily be as liquid as a normal federal government bond, but have essentially the same features, risk features, etc. Yeah.
Because if all the 8 banks decide to go do 25% at the central bank window, that's a lot of cash.
It is, absolutely.
And it puts some pressure on the central bank itself.
Might do. But again, I'm sure I don't think that's a major. I don't think the liquidity situation of the central bank, I'm sure,
will be negatively impacted. But the banks, these rescue banks, still have a lot of liquidity issues of their own.
Yes.
As you just explained about liabilities and all of that, yes. Those assets they've accumulated in the boom years, have largely been eroded because they were largely paper securities or assets, as it were. So now that the liabilities are staring them in the face, so they need to quickly come to the market, whether to do what, IPO, a public offer, or rights issue?
No. I mean, I would not in any shape, form, or fashion right now advise any financial institution to look at an IPO. I think what most of the banks who need to be rescued require, I think, are probably more strategic investors who want to come in and turn the bank around. Not a case where you're going to the public, again, for cash. I think the probability of success on such an offer, I might be wrong. There's always a shock to the system, but I might be wrong, but I think it's probably very low. So I think at this point in time, what you're looking for is more strategic investors. But the point is that a strategic investor will not want to put money in an institution where the capital is still negative. Now, this is where AMC comes in. And all the other things that are being done right now is to take the institutions from essentially where they are today, which is underwater, to at least to the point where they're at this
floating
absolutely zero.
Waters.
So if someone now says, okay, I will put in 25 billion to have, say, for instance, a national banking license. At least that is clean 25 billion that can now be used for the operations going forward. So what would need to happen essentially is that AMC, in conjunction with central bank, etc., because I'm sure there'll be other forbearances, etc., either on the liability side and so on and so forth, to clean the system out.
Let's spend the next 4 minutes before a half hour to clear this issue. The issue about whether the AMC is the almighty bank, as it were, in terms of can it recapitalize all the rescued banks? There are concerns out there about the fact that AMC wants all these rescued banks, toxic gas or whatever, to go to zero level, and that's at that level, then perhaps some folks could say, right, now that the banks are at zero level, we take them up.
Yes. And
decide who becomes the core investor. So the existing shareholders, especially the retail investors or retail shareholders, are fighting.
Well, I mean, I think it makes sense, but I think like everything else, where you are a shareholder and unfortunately a company has, let me use the word, totally extinguished its capital, right? Your right to ownership there essentially reduces. So if you have a situation where a new investor comes in, let me give an example. If I owned a company and that company was worth $100 and I lost the whole, I mean, I've lost my capital, it's now $1 or 1 naira. Let me use that question. What use that currency? 1 naira. And now somebody comes in, right, with a new 100 naira and puts it into the business. That person will dilute me significantly. Am I correct? Exactly. Such that my ownership becomes that of a miniature minority. Absolutely. So the point basically is this: the only way existing shareholders can continue to have control would be they would be the ones that would have to put in the new capital. But if a third party was to do that, that third party essentially will dilute them significantly. So
this is essentially a redemption exercise. Just redeem the banks. Someone is coming to pay the ransom because those folks run down those banks and they've gone to ground zero. Someone has to take them up from there. So whoever else is in the building is at the mercy of the new core investor.
Correct. Correct. In all probability, yes. I mean, again, we do not know what the recapitalization strategies of all the institutions are, but to the extent that it will be a third party coming in, and that third party is bringing, at least within the rooms of this market, over 50% or 51% of the new capital, that core investor essentially controls that institution.
Do you think, a very important and political question here for you, let's see how you answer this. Does it look like the central bank has its fingers right on the entire cleansing exercise? And I'll just take you through the memory lane. When the 640 billion was introduced into the rescued banks in the second part of 2009, it was first said to be cash for equities. That's what Lamido Sanusi, the central bank governor, said. And later, after some heat, he says no, it's for liquidity as the banker of the last resort. And when that also said, okay, fine, if it's a 10-year, if it's a 6-year, 7-year money you've given to Union, Intercontinental, Oceanic, Finbank, and the rest, okay. Then later now you now have the AMC that was going to take all of this in giving government bonds and trying to restructure everything to ground zero. At the end of the day, how will this be resolved in terms of those guys who are holding those shares, with the exception of those ones held by Cecilia and others who will be neutralized through various plea bargain and all that? How will those issues be resolved in terms of cash for the banks, equities for the existing shareholders, and for new core investor?
I think, you know, like everything, if we go back in history, and I guess history judges everything, my view is this: I think there are a lot of people at the time who weren't sure of what was really being done. It was a situation of panic, in my view, and I believe that in hindsight, if what was done was not done, we would have been in a very pretty state at this point in time. I mean, God knows, a lot of people now believe that, you know, the banking situation would have been really, really severe, much more than what we had. So in other words, the intervention was timely. Now, the argument is that when the money first came in, it was supposed to come in as equity. Now, the question was, could the central bank hold equity in a financial institution? Question was legally no. And therefore, that's when you had the sort of like rigmarole of it's now this or now that or whatever. But I think all that essentially will now end up with AMCON, because AMCON has been legally set up to hold equities in a bank. So whatever that amount will be, in all probability, in some transfer mechanism, assignment, etc., will probably end up in the hands of AMCON, given essentially the fact that CBN already owns AMCON 50%, as you probably know, with the Federal Ministry of Finance. So, in other words, whilst the central bank itself cannot hold that equity, it has a vehicle now that can do that. But I think what it did at the time was timely intervention. In fact, there are those who would argue if it had happened much earlier, we probably wouldn't have had, in other words, the earlier the intervention occurred, the less the impact. So when it did happen, I mean, it took a while, but it happened, and at least we more or less saved the sector.
And perhaps the whole economy.
Absolutely.
From a lot of disaster.
Absolutely.
But I think we need to look at this angle, which we discussed off camera just before you came in, about the impact of the AMC on the entire economy itself. But of course, the banks are the direct playing field of the AMC, as it were, in terms of operations. But we've seen significant impact in the food beverages sector. We've seen this, essentially the defensive sector. The question is that moving forward, how do we see the AMC impacting beyond the all the 24 banks or 21 banks, I beg your pardon, with the exception of a few, and getting other sectors to also the real sector to benefit from the operations of the AMC? If there's so much money there, perhaps there's something there for everyone to share.
I think, look, again, I think the impact is more indirect than direct.
Direct, okay. So tell us about more those indirect after the break.
No problem.
Let's take a break. Sonny Ayere, the CEO of Sudan, L'Oreal Merrifield, one of the operating houses here on Broad Street. Let's get back to you after the break. Interest rate decisions this week. Sonny will give us about a minute of his thoughts on what he thinks Lamido Sanusi and the rest of his team will do this week on the first MPC in 2011. We'll be back with that. a very busy business week for central bankers around the world. The U.S. Fed will take decision on interest rate to be announced on Wednesday. U.S. President Barack Obama will do his State of the Union address on Tuesday. It will be on job, healthcare, and how the markets will take those decisions. Across the Atlantic, the Bank of Japan will be the one to watch, as well as the Royal Bank of England. And the world leaders will gather for the World Economic Forum January 26th to 30th this week in Davos, Switzerland. And earnings this week from American Express, Ford is coming back, Chevron, Microsoft, as well as DuPont. So we've touched on the this week agenda a little bit, a key global